All right, let's begin a new sequence. Topics that matter. It's a new shorts edition from the Academic Observer. I'm really changing the formatting from what I normally do, which is more technical episodes, 15 minutes long. I want to make this short and I want to talk about some recurring topics to get us thinking for the day. It's 8 a.m. here in Lisbon, Portugal. And I want to discuss some of the things I read that I found funny or interesting to talk to. First thing I felt the need to talk comes from the United States. And it got me thinking, should we be concerned about this one thing, which is gerontocracy in US political systems? Gerontocracy is basically old age taking power in politics. And the truth is, the Speaker Emerita of the United States, she's running, is she running again? She's running again, I believe, at 84 years of age, which is crazy. Joe Biden himself, he's 80 years old. He's the oldest sitting president already in the United States history, and he wants to run again. 80. There's this octogenarian senator, Mitch McConnell. He's frozen a couple of times mid-speech just in the last month or so, and he's 81 years old. There's a senator in California, she's 90 years of age, Feinstein, I think she's called. I read this, and the statistic from the FT, Financial Times, they said around 20% of U.S. senators are above 70 years of age. That's 1 in 5. And for me, even Donald Trump's cases, I think it's crazy. It's over the top. He's 77 years old, and he's trying to run for office as well. I guess it's not a concrete concern I have, though, because what matters is what they put on the table. I'm more of a merit guy. If they produce some sort of good output, then they should stay. Sorry for the sounds. But I guess an older Senate and House means more experience. But I see twofold problems just out of my head right now from this. First, if I was a young voter, I'd feel some sort of political apathy towards the US because I believe legislatures should minimally represent the overall population, and I'm sure the average is not above 60 years of age. I'm sure of that in the United States. The US House of Representatives averages a way higher age figure than counterparts in the G7 as well, for example. The median age in the G7, I think, is 57 years of age. They are averaging, or their median is above 65. So there's a lot of red flags there in terms of age. And the other aspect, I think, is quite simple. Everyone would think about this. It's physical fitness and mental competence when you're this old. You see, I don't believe in a changing world order, and I talked about this in a previous episode recently. I don't think there's going to be a changing world order in the immediate term ahead, but I think this problem of gerontocracy accelerates political fatigueness and faultiness in the US overall. But that's just me thinking. Next one, another topic I found comical. It comes from the Balkan states, Eastern Europe. They met for this event in Slovenia, actually, and it was about their reaction to seeing Ukraine leapfrogging them for EU accession, which I found funny. Right, the process of accession in the European Union normally takes a long time. Most of the Balkan states right now actively applying are still waiting 10 years in. And the Serbian president, he said this following quote: "The support to the EU, from the EU to Ukraine," that's better said, "granting its candidate status after only 4 months, where for Serbia it took them 4 years, and probably accepting their entrance in 2024 shows Serbia and its people that the EU has little political support towards them," right? Now, for Serbia's case, their application is a bit boggled because they failed to recognize Kosovo, for example. It's a country now, but it was a province from Serbia that gained its independence back in 2008. Also, Serbia is the only country in Europe not to have any approved sanctions towards Russia. So the EU Council President, Charles Michel, he's targeting accession of other countries instead, although he's also targeting Serbia, of course, but he prioritizes, I guess, other states. Let me think of some: Bosnia-Herzegovina, North Macedonia, Montenegro, Albania, even Kosovo itself. But Michel said this accession and application should only be concluded by 2030. Come on. That's a long time. That's in 7 years' time. As a response, the Albanian Prime Minister, he's called Edi Rama, he literally said the following in a meeting. He said, "War should be our new tactic to accelerate membership." That's his conclusion out of this. Right? And he asked other nations live in this conference in Slovenia. He said, so who should attack who? now in this panel to get a membership faster. And he asked this to other nations. I'm trying to remember exactly what he said. He told Bulgaria could easily attack North Macedonia, Croatia could attack Serbia could attack Kosovo, Bosnia could attack itself as well, for, I quote, all of us to join the train with Ukraine to enter the European Union. The only member, I think, from what I read, that wasn't too impressed with these jokes was North Macedonia's foreign minister, Bujar Osmani. He said Ukraine's leverage of war makes sense because we're talking about Europe's integrity here. The war in Ukraine could define the fate of the Union, so I guess he wasn't very happy about that. Bear in mind, though, North Macedonia as a country has waited 18 years already just to begin membership talks with the EU. I found this interesting and fun. Should I go on to talk about one more? I guess I should. I read this one other article, more linked to finance and the financial sector, about Arm Group. Have you guys heard? And their recent listing, or better said, relisting in the stock market exchange. Their IPO raised, I think it was $5 billion euros, no, dollars, $5 billion. But specifically what caught my eye was their expense fees to make this deal go through. It was the highest for any company in almost 5 years, around $85 million in fees and non-underwriting costs, out of which I think 51 million was allocated to accounting and auditing fees, mostly to Deloitte. $17 million in legal fees, I read. They're a microchip designer backed by SoftBank. They don't build or sell chips directly. The company runs by earning license fees and royalties for their designs. So why am I singling out this company? Well, I said this. It's those fees that are so high, right? 7 times more than the average public listing company. Remember, Alibaba, not too far ago, they raised $25 billion when they IPO'd, and their underwriting costs were half of what ARM's is right now. And the answer to that seems to be because ARM Group is actually 30 years old, right? They were already public before reverting back in 2016 when they were purchased or bought by SoftBank. And people defend that the company itself now is quite difficult to audit, namely converting their financial statements now to the US accounting standards. Also the complexity of their customer contracts. I think they've made this inquisition towards Deloitte to explain these high fees, right? And Deloitte declined to comment, which brought some curiosity for me. That's why I wanted to talk about it. But that's just an observation I leave floating in the air. I could talk quite more about the large buyback breaks, which we're seeing now today. They're at quite low levels. Share repurchase in the US as well. Even private market reshapes. I read this comment. I think he's called David Layton. He's the chief executive of this group called Partners. They oversee, I think, over $140 billion worth of assets. And he was saying that of the 11,000 existing industry participants in PE and private equity, he believed only 100 of them would survive in the coming decades. It's quite a statement to make. His firm already estimated drops of 9% this year of private market fundraisers. Net inflows for private equity markets also dropped. I think it was 8% from last year. So the climate is clearly anti-smaller PE firms right now. Out of the active $500 billion of new capital allocations made this year, 2023, the top 25 largest firms have already captured more than half of that chunk. And you can put this sphere into practice. I can give some practical examples of this happening right now, of the reduction of PE firms existing in the markets, right? Not too long ago, this company called CVC, they bought a majority stake of another Dutch infrastructure investor called DIF Capital Partners. They bought it for $1 billion in cash and shares. It was then this other company, Bridgepoint, announced they also just bought or are expecting to buy this Energy Capital Partners firm, which is a US-based renewables company around for $1 billion as well. So the landscape is forming to reduce the number of active small PE firms around. To close this point off, there's this guy called John Moulton, I believe, not Jeremy. John Moulton. He said that, and I quote, institutional investors would much rather prefer to take $1 billion allocated to a larger PE manager than just subjugated themselves into writing a stream of $100 million worth of tickets. The increased legal and compliance costs probably doesn't help this case as well, much less all the recent debt refinancing requirements going around post those low interest era we just had. So without knowing much more about this topic, I'd say it definitely weighs disproportionately more on smaller firms, on smaller PE firms. And that's why I'd agree with what David Layton said in the article from the Financial Times, and why I thought it could be interesting to mention. But here you have it. 4 or 3 topics I chose to spark debate and just inform you guys today in the morning. Thank you for listening. This was Nuno Gomes for the Economic Observer on economics, business, and finance.